A Bala joins us now. Good morning, Bala. Thank you for joining us. What are you telling Mahesh to do today? I mean, is Birla AMC and your fund managers, are they buying? Are they putting cash to work, or you want to wait it out now?
Yeah. Morning, Nikunj. Of course, it's something which is an unprecedented kind of fall that we are saying, which is led by what is being hitting the global market. Definitely from India point of view, what remains the core theme is actually the domestic driven, the opportunities always remains, irrespective of whatever is happening. Therefore, from the fund manager's point of view, look at more inward and what can work well, purely on the basis of what we have been talking about the last 3-4 months, which is domestic driven story, and then growth could probably come back the way I think liquidity has been panning out in India the last 4-5 months. So all the things should ultimately lead to a pickup in the economic growth, though the coronavirus would have some bit of impact on the flow of money coming from overseas investors. But otherwise, domestic investors like us, I think would now look for an opportunity in terms of reconstructing their portfolio, whichever way it has to be done, keeping in mind the developing scenarios in the global market. Definitely, money manager's point of view, always look for some sort of buying opportunities at one side. Also, do a course correction in the portfolio, taking into account the emerging risk and reconstruct the portfolio wherever there is a possibility. And ultimately, what remains the core theme for money manager is the domestic-driven kind of story, which I think most of us try to play. And as long as we stick to that and find opportunity in the current market conditions, I'm sure from money manager's point of view, it can provide both the side of opportunities. One is reconstructing a portfolio, and second is look for opportunities that can become relatively valuation-wise cheaper.
Do you think this is a beginning of a prolonged kind of a winter for the equity markets? Because your local economy is weak, global economy will now weaken further. Forget growth, there is a talk of a recession. Equity markets have corrected, but the correction is not like a bear market correction. We are down 10% on S&P, 4-5% on the Nifty. So given the headlines, what we are staring at and where the world is going to move for next 2 or 3 quarters, do you think this market needs to come down substantially to adjust with the reality?
See, one thing seems to be again and again getting confirmed, Nikunj, is the slowdown in the economy is real, and this, of course, further they're getting reinforced with the development that's happening in global market, which essentially means for the economy to come back very quickly, I think it's not going to be in a very short period of time. I think it's going to take a little bit of, it's going to be a long-drawn effort, both for India as well as global market. In this kind of scenario, when we already know that the equity market is trading at a higher valuation, and this actually, the correction of 10-12%, of course, as we always say and believed in the historically, that no correction, of course, will tell you and come. Of course, coronavirus is bringing in the correction in the global market, which essentially means that it can actually make people who are not been rebalancing the portfolio can potentially rebalance, and that definitely is something which is not going to be reversed immediately, and even from India point of view, the growth is not going to come back in a hurry. So that being the case, the equity market may remain volatile for some time. I think the current volatility cannot be taken as something will be short-lived. And it can have an impact, a little bit of long-drawn process.
A sector, Bala, which has got punctured is metals. Is there value there now?
Yes, definitely there is a value in terms of if you go with the replacement cost theory, there is a value. But at the same time, if there is a demand restriction, naturally it will have an impact on the pricing power itself. I think it has got a combination of pricing as well as the demand supply disruption that has happened. And China definitely has been the large consumer as well as the producers. If that market gets impacted, definitely the price stability will never be achieved. But of course, the way I think metal prices are falling, rather the metals companies have fallen, probably they would have gone substantially below their replacement value. Therefore, at some price, it will become attractive. Though it will remain still cyclical, because one can't expect the sector to go away from cyclical to secular. And therefore, one has to look this as a sector is only as a trading sector rather than keeping it as part of the core portfolio from longer term perspective.
Right. Bala, so just give us a sense, as we wrap up right now, as to what the advice is for investors to do, because we're seeing this, market sell-off that takes place day after day. What is, where are we going to likely see a bottom, and what exactly should be the rational view for investors?
I think one other thing that is good as a habit to happen for the MF industry is, irrespective of whatever the market condition has been, keep building up your equity portfolio and use the fall as an opportunity actually to step up their investments in equity, keeping in mind these investments are not made for 1 year or 2 years, made for 5 years. And therefore, the investors which we have been advising is actually the SAP investing, which has now become the habit, and then continue to keep the habit to build our equity portfolio from a longer term perspective.
Continue to build an equity portfolio from a long-term perspective. That's the word of advice coming in from A Bala.